Hello everyone. Today we will be learning about some basic accounting terms. This is Emma, and she is interested to start a business of selling fruits and vegetables. She has a wide network of friends and relatives who grow fruits and vegetables in their orchards and farms, and she will be able to procure a variety of products from them. She will set up a small shop in the neighborhood for operations and will buy one pickup truck for transportation. Emma estimates that the total investment required will be around $50,000, out of which she will invest $30,000 from her savings and borrow the remaining $20,000 at 4% interest from the bank. The $30,000 invested by her is called as equity. Equity is the amount of money invested by the entrepreneur from his own pockets. People who invest equity in the business become the owners of the business. All profits and losses generated from the business belongs to the equity holders. In our example, Emma is the sole owner of the business and she owns 100% of the equity. There can also be multiple owners holding different proportion of the equity. The $20,000 borrowed from the bank is called as debt. Debt is a liability that must be repaid in the future. People giving debt to the business are not the owners of the business. They receive interest on the amount lent, but they have no share in the profits. Emma will be able to buy the pickup truck for $5,000. She estimates that the construction and setup cost for the shop will be around $25,000. Ben, the contractor, is her friend, and he has agreed to accept the payment in 2 installments. $15,000 will be paid today, and the remaining $10,000 will be paid to Ben after 3 months. The truck, the shop, and the cash or bank balance are assets of the company. These assets are the resources owned by the company, and it will be utilized by Emma to carry on her business operations. The $10,000 that will be paid to Ben after 3 months is also a liability for the business. This amount is called as payables, and it must be paid in the future. Ben is known as a creditor. The business owes money to the creditors. Emma now enters into an understanding with various farms for the periodic supply of fruits and vegetables. She places her first order for a total of $20,000. The vendors will be paid half of the invoice value upon delivery, and the balance will be paid within 30 days of delivery. That is, she will make the payment of $10,000 today, and the balance will be paid by the end of the month. This pending amount of $10,000 is also included under payables. The vendors and farms are also the creditors of the business, as we have to pay them money. The fruits and vegetables purchased is the inventory of the business. Inventory includes the raw material used for production purpose and the finished goods that will be sold to the customers. Inventory is also an asset. Emma welcomes you to her store, Nature's Basket, and she is now open for business. To manage the store and customers, Emma hires Mike, for a monthly salary of $2,000. Utility bills and fuel for the truck will cost $1,000 a month. The salary, fuel, and utility bills are classified as expenses of the business. The interest paid to the bank for the loan taken is also included in expenses. Expenses are the cost of running the business and they help to generate income. Expenses can be incurred on a daily, weekly, monthly, or yearly basis. With some advertising and publicity, Emma is able to attract customers to her shop, and her sales increase. The amount received from selling the fruits and vegetables is known as revenue, and it is an income for the business. Revenue refers to the total income generated from selling the goods or services. Revenue can be calculated by multiplying the selling price with the number of units sold. For example, if 100 watermelons are sold for $2 each, the total revenue is $200. Some local restaurants and cafes also start buying fruits and vegetables from Nature's Basket. Such customers buy on credit. That is, they buy the goods today but make the payment after some time. Suppose Emma sells goods worth $5,000 to such restaurants. They will pay her the money only after 7 days. This amount of $5,000 is also treated as revenue. But as the payment will be received later, it is called as receivables. Goods are sold to the customers today, but the payment will be received after some time. Receivables are also included under the category of assets, as this amount of money belongs to the business. These restaurants and cafes who owe money to Nature's Basket are called as debtors of the business, as we have to receive money from them. So class, here is the summary of what we have learned today. We will learn more about assets and liabilities in the next video. Till then, be happy, stay safe, and enjoy learning.